Okay, this video we're going to look at 2016 question 9. Students love budgeting, they love cash, they love production, but sometimes they throw the two of them together and that can be a little bit more difficult. First thing to note, when they throw the two of them together, it's usually one product and it's one raw material. So if you look at the charts that I have on the board and look at the production budget, I'm not looking at two products here, I'm going to look at it monthly. Okay, so it's only one product, but this time you're not doing a yearly budget, you're going to look at it monthly. Look at the raw materials purchases budget. There's only one raw material and I need to look at how much of that I'm going to purchase per month. Then we go back to the cash budget, which you already have completed. And in the cash budget, we're going to look at our receipts, we're going to look at our payments, and we're going to look at our net cash flow. We cannot do this till we have A and B done. Now, when you're looking at the exam question again, it's 2016, just make sure you write down that this is worth 20% of the exam and you would have 30 minutes max. You want to actually really, with this question, try and make up a little bit of time in the exam that maybe you'll have extra time for your question 1. So when you get this question, there's a few things that I want you to underline. So first of all, it's a new business. So July is the very first date, okay? Which means if it's a new business, there should be no opening stock in July because you're just starting your business. So it's planning to set up a business. So first of all, can you highlight set up a business and can you write in there should be no closing stock at the start. Now your business is in July, so highlight again the 1st to the 7th and it's made a forecast for 6 months. So you know you're looking at this in a monthly capacity, not an annual one, which we've been doing so far. So it gives us the sales that they expect. Remember, budgeting is what you expect, and it gives us the sales revenue. Now, if you look at this, you have 1, 2, 3, 4, 5, 6 adjustments. And then look at the question. In part A, I want you to highlight production budget. Part B, raw materials purchases budget, highlight it. Part C, I want you to highlight the cash budget. And part D, I want you to highlight the budgeted trading profit and loss account. So what we want to do first of all, before we start the question, we want to see which parts are relevant to which part of the question. So number 1, each product that you want to make requires 3 kilograms of material X, which costs €4 per kilogram. Now remember, it's material X, but that's the only material you're using, so I don't really need to use the word material X unless you want to put it in. That is to do with your raw materials purchases. So put beside that, that's part B. Stock of finished goods are maintained at 60% of the following month's sales requirements. Highlight that. Now what that's telling you is at the end of each month, you want your closing stock to be 60% of what you expect to sell next month. Okay, that's really, really important. Stocks of raw materials should be sufficient for 20% of the following month's requirements in kilograms. So finished goods are to do with part A, the production budget, and the raw materials are to do with part B. Then part 4 is to do with the cash. So part 4 information is to do with you answering part C of the question. So we'll go through that when I'm doing the cash budget over here. Part 5 is to do with the cash budget. So that's helping you answer part C. And part 6 of the information is to help you answer part C. So let's go through this. Part 1 is to do with answering part A. Part 2 is to help you answer part B. Part 3 is for part B. Part 4, 5 and 6 will help you answer part C. Okay, so again, you have to remember it's a new business, so there should be no opening stock at the start. So straight away, here I can go in July, no opening stock. In July, no opening stock because it's a new business. So let's fill this in then. So in July, you expect to sell 9,000. In August, 9,750. September, 11. October, 12. And November, 12,500. Okay. And the question asks you to do the production budget July to October. I've just put November in there and I'll explain to you in a minute why November's in there. Now it said that for finished goods, you want your closing stock to be 60% of what you need for next month. Now in July, I want my closing stock to be 60% of what I need for August. So that's 9750 multiplied by 0.6, and that's 5850 is what I want my closing stock to be. So that means that I'm ready to sell that next month. So if we add them up, there it's 14,850. Now at this stage, I want you to pause the video and I want you to fill in the rest of that for me. Okay, so hopefully you've got 10,500 here, 11,600 here. Now they only asked you to do July to October, but remember, for me to get my closing stock, I need my next month's sales. So I just put this in just so I'd be able to get my 60% of it. So in November I want to sell 12,500, but I want to have 60% of that by the end of October. So that means in October it's 12,000 plus 7,500 minus 7,200, and that's 12,300. And I don't need to do the rest of this because the question asked you just for July to October. Now if you're doing that in the exam, 2, 4, 6, 8, 10, 11, you get 11 marks for that. Okay, fairly basic. Right, let's look at this. This again, they ask you to do the 4 months, but I'm going to need November because in November we know that the closing stock will be based in our November. So let's fill this in. So our units of production is 14,850, 10,500, 11,600, 12,300. Follow. I need this. So even though I don't need to have any marks for this here, I need my November figure to make sure I'm going to be able to work this out. So let's look at your November figure. Your opening stock is 7,500 because remember your closing stock becomes your opening stock. And in December, I believe I'm going to sell 12,800, and I want to have 60% of that. So that's 7,680. So in November, I believe that I will produce 12,800. Okay, so initially we didn't think we needed that. When I came down here, I needed that figure for my raw materials purchases budget. Okay, even though you're only getting marks from here to here in the exam. Okay, so looking at this question, it says every time you want to make a unit, you will need 3 kilograms of material X. So if I want to make this many units, I need to find out how many units or how many kilograms I need. So each one of these will have to be multiplied by 3 kilograms. Okay. So I'm just going to quickly get these from the sheet here. So that's 44,550. Again, 44,000. You don't have to put the sign kilograms in. I just think it kind of makes it look a little bit easier for you when you're trying to figure out the difference between euro and kilograms. 4,800. This one is 36,900. And the last one is 38,040. Okay, very similar. Now we want to look at our opening stock and our closing stock. Now, for the raw materials, it said you want it to be sufficient for 20% next month. So this is next month, so I want this to be 20%. So that's 31,500 multiplied by 20, so I want this to be 6,300. Again, just go back here, why is there an X in here? It's a new business, so it doesn't have any raw materials at the start. So that means that I want to make 50,850. Again, so my closing stock becomes my opening stock. And again, I'm going to give you a few minutes to fill that up for me. Okay, so again, I've just filled in all of these, and I said I forgot to fill in the totals for you. So 32,160, 35,220. You're going to find this question is actually not that difficult. The problem, sorry, I'm missing something there. The problem with budgets is they're just tedious and you can make maths mistakes on them. So this is how much raw materials you want to buy, and then, but you know your raw materials purchases budget, I need it in units, but I also need it in euro because we're going to be putting it into your either your manufacturing account, or in this case I need it for my purchase or my cash budget. So your raw materials, you're buying them at €4. Okay, and then we'll get our total. So our total here again is 203,400. So you believe that in July, on purchases of raw materials, you'll have to spend 203,400. Okay, you believe that in August, 128,640. September, it's 140,880. And October, it's 148,512. Okay, so that's again what you believe that you're going to spend on purchases in all of those months. Okay, so then looking at our cash budget, and again our cash budget is basing it on parts 4, 5 and 6. So it says cash customers are 30% of sales revenue will be immediate cash. So in July you expect to take in 270,000, and of that 270,000 you expect to get 30% of that straight away. So in July your cash sales would be 81,000. Okay, it's basic enough. August, do the same thing, 87,750, and 90,000 for September, and 108,000 for October. Then it says that 70% of the sales revenue will be from credit purchases. They will pay 50% in the next month and 50% 2 months later. So let's do 270,000. If we look at that again, you got 270,000 you expect to sell in July. You got your 81,000 straight away. So you have 189,000 that you sold in credit, and you're going to collect that in 2 installments. In August, you're going to collect half of it, the rest is due, and in September, you're going to collect the remainder. Okay. Then likewise, let's look at August again. You have 292,500, and that leaves, after the cash part, it leaves 204,750 is still to be collected. You're splitting it between 2 months. In a month later, you're going to get some of it, 102,375, and the rest of that in October. Okay, and then it's the same you're going to do for September, 115,000, just take it here, 500. Okay, I'll fill in the totals for you in a minute. Your purchases, again, your purchases are here. This is what you want to purchase in your raw materials. Be very, very careful. Read the question carefully. This is what you want to purchase in July. I want you to watch when do you pay for that. So if you look at part 5, 1 month's credit is received from suppliers. So if this is what you buy in July, you receive 1 month's credit. So that means that you won't pay for it in July. You'll pay that amount in August. You'll pay this amount in September, and you pay this amount in October. Okay. Then it says your wages are 10,000 each month plus 5% of the sales revenue per month payable as incurred. So that means that your wages, you want to give 10,000, plus 5% of the sales revenue. Now the sales revenue is given to you in the question. So 5% of 270,000 is 13,500. So this month you will pay them 23,500. And likewise you go straight through all the rest of the years doing that, or the months. So that's 24,625 there, 26,500 here, and the last one is 28,000. Okay, straightforward enough. Now your variable overheads will be €4 per unit. So these are €4 per unit. Now remember, this is your units. So it's €4 per unit. So you've your 14,850 multiplied by 4 is 59,400. Now remember, if they're doing per unit, you're going back to here. Okay, 42,000, 46,400, and the last one is 49,200. Okay, the next one, fixed overheads including depreciation is 28,000 per month. So you're not allowed to have depreciation here. So sorry, the figure is 28.
Is it not 8?
And I want to take away the depreciation. So there's a problem with that. So we're going to have a look at that now in a minute.
It is 8 grades, is it not?
Okay, so to work out our depreciation, just do an aside note for your depreciation. So the 1st of July, they said you purchased equipment for 60,000, and it said you would have it for 5 years, or useful life 5 years. That means depreciation for 1 year would be 60,000 divided by 5, so every year you're writing off 12,000. I want you to be very careful. We are doing not annually here, we're doing monthly. So I need to work it out per month is 1,000. So fixed overheads are 28,000 per month. I don't want depreciation, so I have to take away 1,000. So that means it'll be 27,000 every month. Okay, the next one is the equipment. What month did you buy the equipment in? You bought it when you started out, so you paid 60,000 in July for your equipment, and you didn't buy any more equipment. Now the loan, I want you to be very careful with this. It says your loan, you do not start repayments till August, and every month you're going to pay back €1,000. So in August, the loan repayment, none in July, it will be 1,000 every month, and the interest is the same. The interest doesn't start till August, and the interest is €400 per month. Okay, so it's fairly basic there. Then again, I'm going to put in the opening cash. You were only starting up your business, so there was actually no opening cash in it. Where did you get your money to start off? You got this loan of 48 grand. Okay, I'm going to ask you to fill that in for me now, and I'll fill it in as well. Okay, so I just filled this in very quickly for you there. So your net cash flow, you know this from doing your budgets from 3rd year, it's your income or your receipts minus your payments. So looking at this, and this is what you should see for business students as well, in the cash flow forecast, you should see generally when a business is starting up initially, there probably will be a negative equity. So they're down money, and then you slowly start to see them making money. So your opening cash is 0 because you're just starting off your business. Remember, your closing cash becomes your opening cash. Closing cash becomes the opening cash. Okay, we want to finish off this, and we're going to do the budgeted trading profit and loss account. Now, for part D on this, will you just remember you're only doing 4 months. Okay, so filling in this, you have your sales. So remember this, it's different to the cash. This is if you receive something or spend something. This is what should have been received and should have been paid. So in your sales, you go back to your table, your sales revenue. I don't care whether I receive the money or not. I believe in July I will sell 270. August I will sell 292,500, all the way up to October. So that's how much I expect to sell. Now whether I got the money or not is relevant. In the trading profit and loss account, you put in what you expect to get. Okay, so that's from the table in the question. Your purchases, you go back to your raw materials purchases budget, and you take your totals from July, August, September, October, and that's your total. Your closing stock, you have 2 types of closing stock, remember. You have finished goods and you have raw materials. You might say, well, we never put raw materials in our trading account. We have to here because we're not doing a manufacturing account. So you have 2 closing stocks. The closing stock of finished goods came from my production budget, and they told me in the question that it's valued at €20, and the raw materials closing stock comes from the raw materials purchases budget. So your expenses, and I put down everywhere that the expenses came from. The wages came from, the cash budget. Variable overheads came from the cash budget. Fixed overheads from the cash budget. Depreciation came from my note. It's €1,000 per month. I'm doing this for 4 months, so the depreciation is 4,000, and the interest came from the cash budget. So very simple to do this once you understand where I'm getting the figures from. Just again, you can only put items in here if you receive or you pay them, whereas in here you put what happened, whether they were received or not.